Hello friends, I am Pradeep from Research. I'll be talking about our technical outlook on the market. In last week's report, we had indicated that the weekly candlestick of Nifty has formed a hammer pattern, which suggests that bulls are strengthening. This is the weekly chart of Nifty, and in last week's video, we had indicated that a hammer pattern has been formed, which was this candle, and which suggests that bulls are strengthening. We also reiterated that a resumption of higher top higher bottom formation on daily chart is required to turn the near term view decisively bullish, and that the first requirement of higher top will get fulfilled if Nifty is able to cross 5518, the top made on 20th May, which will then have to be followed up by a higher bottom. If you remember, I had mentioned in last week's video that Nifty is stuck in this lower top lower bottom formation since 18th April, and first requirement will be that Nifty crosses this top, which is 5518, the top made on 20th May, which will make a higher top, which will then have to be followed up by a higher bottom. Things panned out exactly this way we had anticipated. The hammer pattern did yield desired result as Nifty rose to touch a high of 5605 during the week, where it got resisted by 200-day exponential moving average and fell sharply to end the week at 5516, gaining 0.74% week on week. By taking out the immediate previous top of 5518, Nifty has fulfilled the first requirement of a higher top higher bottom formation. As you can see, Nifty has decisively crossed this top here, thereby fulfilling the first requirement of higher top higher bottom formation. Now the benchmark is possibly in the process of making a higher bottom. For this requirement to get fulfilled, the ideal situation would be that Nifty corrects at least 38.2% and does not correct more than 61.8% of the previous up move. The 38.2% and 61.8% retracement levels of the 5328-5605 up move are placed at 5499 and 5434 respectively. What we are saying that having made a higher top than this at 5605, Nifty is now in the process of making higher bottom, and for this requirement to get fulfilled, the ideal situation would be that Nifty corrects at least 38.2% of this whole up move, but not more than 61.8% retracement of this whole up move. 38.2% retracement comes to 5499, while 61.8% retracement comes to 5434. So what we would like to see is that Nifty falls at least till 5499, but resumes the upward journey before breaching 5434 and subsequently takes out 5605 to complete the higher top higher bottom formation. If that happens, we would be looking out for nothing less than 5800 as the target, where the trend line adjoining 6338 and 6181, the tops made in November 2010 and January 2011 respectively, present a stiff resistance as shown in the weekly chart. What we are saying that if Nifty makes a higher bottom and then crosses this top of 5605 subsequently, then we will be looking out for a target nothing less than 5800, which you get from adjoining these two tops, that is 6338 made in November 2010 and 6181 made in January 2011. On the downside, as mentioned earlier, 5434 is the level around which the fall should get halted. Next support will come around 5350, emanating from the trend line adjoining 4786 and 5177, which are the bottoms made in May 2010 and February 2011 respectively. What we are saying that if Nifty corrects, then the fall should get halted at 5434. If it doesn't get halted there, then a further correction till about this level is likely. This is the weekly chart of Nifty, and as you can see, this trend line which adjoins bottoms of May 2010 and February 2011 presents a support around 5350. Those who want to bottom fish can buy around current levels with a stop loss of 5434 on closing basis. Others can wait for the crossover of 5605 on the upside for taking fresh long positions. What we are saying that those who want to bottom fish, and they can buy at around current levels with the stop loss of 5434 on closing basis, but those who want to be very sure can wait for this level to be taken out, which is 5605, and take fresh long positions after that. With this we conclude the technical outlook. Thank you.